China and India, two major Asian economies, are experiencing contrasting trajectories in global financial markets. China's clout is diminishing. India, it's gaining prominence. Take a look at our next report to find out how.
China's economic slowdown due to COVID restrictions, a property market crisis and persistent tensions with the West has led to a massive retreat of funds from its stocks and bonds. Foreign investors have pulled a staggering $188 billion from Chinese stock markets, marking a 17% decline since December 2021. Investor caution towards China has also led to a substantial decrease in foreign fund participation in Hong Kong's stock market, with a drop of over one-third since the close of 2020. In contrast, India is emerging as an attractive destination for investors. India, with its robust growth prospects, is becoming a favored choice for investors seeking returns. Other factors contributing to India's appeal include its resilience to Chinese economic fluctuations, growing self-sufficiency in supply chains, and the AI boom benefiting markets in the US and Taiwan. Furthermore, a strategy of excluding China from emerging market portfolios is gaining traction, with record launches of equity funds that do not include China. Global investors have pulled about $26 billion from Chinese government bonds in 2023, while investing $62 billion in notes from other emerging Asian countries. Although China remains a significant part of global portfolios due to the size of its economy and manufacturing supply chain role, it's clear that India is becoming a compelling alternative for investors looking to diversify their portfolios and reduce exposure to China's uncertainties. India's growth potential, coupled with its relatively lower exposure to geopolitical risks, is positioning it as a rising star in global financial markets, while China grapples with challenges that have led to a retreat of foreign funds. Bureau Report, WION World is One.
Now, Jayant Krishna is the CEO of the Foundation for Advancing Science and Technology, and he's joining us live from New Delhi on the show today. So thank you so much for joining us. What specific factors do you believe make India an attractive destination for global investors, and how sustainable is this shift in the long term?
A few years since the pandemic, the onslaught of pandemic, the world has seen that how dangerous it is to lay all eggs in one basket when it comes to the manufacturing supply chains, the global supply chains, that they have, and also, the fact that China, is a country where the COVID started from, and the curbs for COVID remain for a very long time to come. So vis-a-vis that, I think India is a very, very attractive investment destination. If you look at our ease of doing business, that has improved very substantially. If you look at the skilled people, the educated people that we have, and one fundamental difference between India and China is that China is an aging population because of their one-child policy that they have, they have had for long, and India has the world's youngest working age population of about 28, 29 years, and reasonably skilled. Of course, more skilling needs to be done. And I think even if you look at other than the labor, the land availability in India, last few years, a lot of state governments have created land banks, which are easily available for overseas investors, and they don't have to go through the struggle of buying it from farmers. So I think these factors are a huge advantage for India. And India has the hunger. India plays in business a very fair game. It never wants to win at the cost of the other nation. Unlike China, which has always showed the big brother attitude of a kind which even US did not show, earlier. So I think, I think China fundamentally has not realized that every time it can't have a win-lose game. For any relationship and business to be attractive on a long-term basis, you have to play a win-win game. That's what I believe. And that's the reason, India is poised reasonably well to attract most investments, which MNCs are looking at having at destinations other than China.
Right. Now, that being said, China is grappling with many issues at the moment, as you of course know. What do you think is the way out for China to regain its lost investors?
See, I mean, let's not write off China that easily. Still Chinese economy is almost 5 to 6 times, 5.5 times bigger than that of India at around 19.5 trillion, dollars. But the fact is, China will have to redraw, go back to the drawing board. I mean, the fact is that in China, there's a very, very scant respect for the patents, for intellectual property rights, and so on and so forth. They have to ensure that the country starts respecting these more. They have to ensure that their judicial system is such that a lot of international organizations, the business, if it has to knock the doors of judiciary in China, they will get it will be treated with equity and fairness, and justice would be done, which is not the case right now. So I think the fundamental reforms in their judicial system and respect for intellectual property and copyrights and patents, I think that's very, very important. The second thing on my wish list would be, if China has to bounce back, is that they must have, a free press. In China, there's no freedom of press at all, which is a huge, big depression. I know China's form of government, can't become democracy overnight. I know that fully well. So I'm not even including that in the wish list. But that's something. Absence of democracy is what has been costing China. And then even if they don't, the country, doesn't switch over to democracy, of which there is no likelihood in the near future. At least they should respect democratic norms, integrity, transparency, and play a value-based game in the international business. If they play a win-win game with all countries, with all stakeholders, with MNCs, I think the message would go that yes, it's a different China, it's a new China, that we are engaging with, and it's not that China has ceased to be a good investment destination.
Right.
It's just that these factors they have to work on, very, very strongly and with the right kind of rigor and robustness.
All right. Well, Mr. Jayan Krishna, thank you so much for joining us on the show with your insights on this.
Thank you.
WION is now available in your country. Download the app now. Get all the news on the move.